Now, one thing that I would say, I had asked you kind of a question about this education piece and getting people involved into it, but it seems like really more and more people are starting to wake up to it. I've seen some polls recently that people are actually saying it's one of their favorite long-term investments now. So we're starting to see that. It seems to be coming back to me. You've been around it for a long time, so I'm wondering if you see this resurgence, and if so, I mean, what would you attribute that to? Do you think like all these talks of inflation and debt ceiling debates and stuff like that is kind of pushing this attention back towards that?
Well, I would say one of the mottos we have in the precious metals business is gold is the bank that never fails. Whenever we have bank failures, saving and loan crisis, people wonder, where should I put my money? And they look at putting a little bit into something tangible and hard assets like gold. Again, a $20 gold piece in 1933 was $20. Now it's $2,000, up 100-fold. That $20 bill from 1933, what will that buy you today? But yet that $20 gold piece held its value and increased in that time. And you can take that back for, as you said, thousands of years to before Christ when it was money. So whenever we have uncertainty in the world, when we have banking crisis, war, or any of those things, a lot of people around the world globally, not just in the United States, flock to gold. And I think more and more, central banks in Singapore, China, we've had record central bank buying of gold in the last 10 years, 20 years, loading up on gold. And we're seeing more of the public in this country. As you get uncertainty, they're looking for other places to go. Alternative investments, as you talked about.
Yeah. Yeah, I mean, you can see, over the last several years, I've used these charts many times in the past, but central bank buying has gone short on treasuries. They're no longer stocking up on U.S. treasuries anymore. The fake money, which I think really got kicked into high gear after Russia had their FX reserve taken, and they went, oh, crap, what would we do? Well, maybe if we had gold. And so what we've seen from their balance sheets is net sellers of treasuries and now net buyers of gold. And to the point that you made, they're buying more gold than any time in history right now, which is pretty amazing. And if you think about it, if you look at how much actual physical gold is out there, look at the COMEX and so forth, you'll see that if a nation wanted to take their sovereign wealth reserves of $100 million and put that into bullion, like they can't just go get $100 million worth of gold. Like it's not just there for them. And I saw it today, I covered it earlier on another segment, but the BRICS nations, we've been hearing more and more about the BRICS nations rising up. And now they've said that their goal is to launch their gold-backed currency by the end of the summer. I don't know if you saw that, or what do you think that has an impact on all this?
Well, I think it'll you've got to back it with gold, at least a certain amount of gold. Your ETFs are backed dollar for dollar with gold if someone invests in an ETF, exchange-traded fund. And I think anything that puts more gold there puts more demand on the market. I think long-term, you're going to have ups and downs in this market as anything. But long-term, we've seen gold going up from $250 in 2000 to almost $2,000 this year. So long-term, it's outperformed the Dow, the S&P. You can pick different dates where one has done better than the other, but since 1970, since 2000, gold has outperformed the Dow, the S&P in a lot of places. It's worthy of, we say it has a negative beta. It goes up when a lot of other investments go down. So that's why the World Gold Council recommends a portion of your investments be in gold.
Yeah. What do you say about, really big, gold hit its high in 2011 at about 2,000, and now here we are, 12 years later, and we're back up to 2,000, but the central banks have increased the money supply by 50% in that same time period.
Well, I just think like anything else, you have cycles, and there are a lot of factors in play. How much is being sold into the market by central banks and other owners, what traders are doing. Sometimes they sell off to cover losses in other areas. But long term, the trend since 70, since 2000, since 2005 is upward. And I think that will continue. It has since forever.
Yeah. What about, do you think there's a lot of maybe manipulation or at least suppression in the price of gold, by the LBMA?
There have been lawsuits about that, about governments trying to manipulate gold, because gold is really a thermometer. It's a a measure of how governments are doing. When gold's going up, it generally means currency is weaker. It has a direct correlation to the dollar dropping.
Typically,
and so when the dollar drops, that doesn't relate well on a country and an administration. And so administrations don't like to see gold going up and their currency going down and weakening generally. Once in a while, they want a little weakness to help with trade or stuff. But overall, they don't want to be the administration that cratered the dollar or cratered their currency.
Right. Destroyed the currency. Certainly not. Certainly not the Fed. I mean, they don't want to give up control over money for sure. And by having that dollar continue to lose value, that would certainly accelerate that. What about, you mentioned since 1970, obviously 1970 is the year before Nixon took us off the gold standard. Do you think that was a big catalyst for gold when that happened?
Oh, yeah. It was a huge catalyst. And, of course, it was part with wars, oil rising, and a lot of uncertainty rising up to 1980 by 850 from the official price of 35, and it really wasn't trading at that, to 850 by 1980. And so, that was a big part. I did want to bring one other thing up for your listeners. It's very important. I'm on the executive board of the National Coin and Bullion Association, and we've managed to get work on different states to make precious metals, rare coins and precious metals, sales tax free in a number of states. Right now we have some form of exemption in 41 out of the 50 states. And so working to get, we believe precious metals should be sales tax free. They're in IRAs, they are an investment, and we have worked continuously to get state by state. I helped get Texas coins and metals, precious metals, sales tax free in 2012.
So that means if I were to buy the gold from you, I wouldn't pay sales tax on the gold.
Correct, unless you're in one of the 9 states that does make us charge sales tax 8 to 9%. And on gold bullion, I make 1% to 2%, sometimes less if you buy volume. I don't want you to have to pay 8 to 9% in sales tax.
And that's that's a state thing, right?
Yeah, you should always buy from in a state. If they ship it into your state, that's the law, then they got to charge sales tax. So go physically and buy it in another state, have it shipped to a depository in a sales tax free on precious metal state, a depository in Delaware that doesn't have sales tax on anything, in Dallas that doesn't have sales tax in the state of Texas on precious metals. You can do that to avoid the sales tax, like shipping it in to a state that might have a sales tax.
That's a really good point. I mean, especially if you're buying a considerable amount of gold, that sales tax could really hit you hard.
If you spend $100,000 on your gold investment, you don't want to spend $8,000 on sales tax if you could simply drive over a state line and buy it in a state that's sales tax free. So that would save your listeners a lot of money.
Heck yeah. Yeah, I mean, if gold would go up by 8%, that would be a good move. But here you are down 8% right off the bat. So now it's got to swing, 16% for you to get that money back. So,
and we're working on a few more states, Arkansas, Tennessee. We chomp away every couple of years when the legislatures meet. We show them the benefits, not a loss to the state, the benefits and why other states have done it of not taxing coins and precious metals.